Tony Gurnee, Ardmore Shipping, the shares are up about 16% in the past month. You beat the street on the top and bottom lines just a few weeks ago when you reported your first quarter. So what's driving the momentum?
Well, since last November, after the oil price collapse, we've really been in a new phase in our business, and we think overall in the oil market. And in fact, year on year, charter rates in our business have doubled. And the real driver is oil price volatility. That creates trading opportunities for our customers, and they send our ships on longer voyages.
Can you dive into that a little bit more? Because oil was at 40 for a while. Now it's stabilized at 60. And all we kept hearing when it was at 40 is that the shippers love a glut. Mm-hmm. So can you tell me what you actually love?
Yeah. Well, I mean, there's still a glut at 60 or 70. And I think the key is that, yes, oil is off the bottom, but it's still way below where it was when it was at 110 or 100, which was very stable. So we think we're in a new phase in the oil market where oversupply and market forces are going to dominate, not OPEC. And as long as that continues, it's ideal conditions for our type of business.
And your type of business is refined product and chemicals. Talk about the U.S. exporting refined product, because from what I hear, that's doing awfully well.
Okay, so what we do is we move jet fuel, diesel, gasoline from refineries to the end users. The U.S. Gulf has got a very, very large and competitive, on a global scale, competitive refinery business. And in fact, product exports from the U.S. Gulf have been increasing at about 10% a year for the past 5 or 6 years. And we think that's going to continue.
And your most profitable routes are, I know you have a very high utilization rate, probably close to 100%. Mm-hmm. What are the most profitable routes? Okay,
so really it's a global business, and broadly speaking, we think of it as the Atlantic and the Pacific. What's really interesting is that the Pacific market has really strengthened a lot in the last 3 months as new refineries in Saudi Arabia and other countries in the Middle East have come online and created a lot more demand for our ships.
And what about worries about the Strait of Hormuz? Is there any worries? Because right now we keep hearing about Iran attacking vessels going through that strait.
Yep. Well, I think we've got a great Navy, and I think they're doing a really good job in keeping that region safe, even though there's a bit of intensity at the moment. But at the moment it's business as usual, and all the ships are going in and out of the Persian Gulf as they should.
And on the other side of the world, what about China?
China is, obviously the headline there is that the economy is slowing down. That's done something interesting in our business, which is that their refinery base now exceeds their domestic consumption. So they're actually becoming a very large exporter, in particular of diesel.
And then finally, speaking of supply and demand, let's talk about supply and demand for ships. How many ships do you have now? How many are you going to have by year end? And eventually we're going to hear the talk about there's too many ships in the water. So where are we with regard to global supply?
Okay, so in terms of Ardmore, we're on a great growth trajectory. When we did the IPO 18 months ago, we had 10 ships. By the end of the year, we'll have 24. In fact, this year we're growing our revenue base by 70%. We're really pleased with the timing because we're in a very, very strong market at the moment, and it's really been very additive. In terms of the overall sector, we think that with the rate of demand growth, we think that the supply growth is very contained, and there seems to be a lot of discipline among both ship owners and shipbuilders in terms of what they're prepared to order today. So we really think we're very well set up in terms of demand growth and supply growth.
All right, thanks a lot, Tony.
You're welcome, Greg.
Thank you for watching The Street.